Hey, what's going on, everybody? Welcome back. And it is the beginning of June 2026. Today is June 10th, and it's time for your East Tennessee housing market update. So, every single month, I break down the macro numbers that are driving the housing market nationally, and then I take you to the market by market analysis through 9 local areas right here in East Tennessee so you know exactly what is happening on the ground where you live, where you're buying, or where you're selling. And I got to be honest with you, this month the data is fascinating. We've got one market where pending's nearly doubled. We've got another sitting at over 9 months of supply. And we've got price appreciation numbers that will raise your eyebrows. So let's get into it. Okay, let's start where we always start, the 30-year fixed mortgage rate. As of this report, we're sitting at 6.68% for a 30-year mortgage. That is essentially flat month over month. We've been hovering in this range now for a while, and honestly, that stability, even though it's at an elevated level, is actually helping the market function. And here's why. When rates were swinging around wildly, jumping from the low 6s to the high 6s and back, buyers didn't know what to do. Sellers didn't know where to price. Well, agents can now set some expectations because at 6.68%, both sides of the transaction have calibrated. Buyers know what their payment is going to look like, sellers know what their buyer pool can afford, and deals are getting done. Now, is 6.68% where anyone wants to be? No. We'd all love to see a 5 handle on that number, but the market has stopped waiting for permission from the Federal Reserve to transact, and that actually is a healthy sign. Okay, now let's talk about one that a lot of people skip over, but I think it's critically important, and that is oil. Brent crude is sitting at $94.27 a barrel right now. If you've been around town, you know that prices were quite a bit higher for gas at the gas station not too long ago, and they're starting to come down a little bit. So why do I bring up oil in the housing market update? Because oil touches everything. It affects your transportation and your logistics costs, which means it costs more to ship building materials to a job site. It affects the price of those materials themselves. Petroleum is in everything from roofing shingles to PVC pipe to the asphalt on the roads in your subdivision. And more broadly, elevated oil prices put inflationary pressure on the entire economy, which erodes consumer purchasing power. So when you're wondering why new construction costs what it costs, or why your grocery bill is still high, and that's affecting how much house you can qualify for, oil at $94.27 a barrel is a big piece of that puzzle. Okay, and that brings us to this big one, the latest CPI report, which came out today. And folks, it's not great. Headline CPI came in at 4.2%, and that's up from 3.8% in the prior report. That is moving in the wrong direction. Core CPI, which strips out food and energy, ticked up a tiny bit to 2.9% from 2.8%. And the Fed's target, as a reminder, is 2%. So we're not close. And more importantly, we're getting further away, not closer. That headline number accelerating from 3.8 to 4.2 is significant. It tells us that the inflationary pressures in the economy are not resolved, and they are reasserting themselves. Now, I want to zoom in on something specific here because I think it matters a lot for how people are actually experiencing the economy day to day. Look at the gap between headline CPI and core CPI. In the previous report, that spread was 1 percentage point, 3.8% headline minus 2.8% core. Now it's 1.3, 4.2 minus 2.9. That gap is widening, and the reason it's widening is that food and energy prices are re-accelerating faster than everything else. And here's why that matters for housing. Core CPI is what the economists and the Fed like to focus on, but headline CPI is what people really feel. It's what you feel at the gas pump. It's what you feel at the grocery store. And when those costs are eating up more of a household's monthly budget, that is money that's not available for a mortgage payment. it directly compresses buying power, even if rates don't move a single basis point. So what does all this mean for the Federal Reserve and for rate cuts? And I'll give it to you straight. Higher for longer. With headline CPI at 4.2% and accelerating, the Fed has absolutely no room to cut. They need to see sustained movement toward that 2% target before they even begin to signal cuts. And right now, the data is going the other way. The probability of any rate cuts in 2026 has dropped significantly. We may be looking at a hold through the rest of the year, and honestly, it could extend into 2027. So for your planning purposes, I would tell you to expect the 30-year fixed rate to stay in the mid to upper sixes, and frankly, don't be surprised if we test 7% again before the year's over. Plan for reality, not for hope. And this is exactly why we keep talking about the lock-in effect, because it is the single biggest force shaping the inventory picture in East Tennessee and really across the entire country. Think about this. If you bought or refinanced a home in 2020 or 2021, you likely locked in a rate somewhere around 3.25%. And on a $300,000 loan, that's a monthly payment of roughly $1,360. If you were to sell that home today and buy the same price home at today's rate of 6.68%, your payment jumps to approximately $1,930, and that is $570 more per month for the exact same house. So what do most people do? They stay put. They do not list their home. And that is why the inventory remains suppressed in many markets across the region. It's not that people don't want to move, it's that the math doesn't make sense for a huge portion of homeowners, and until rates come down meaningfully, this dynamic is going to persist. All right, now let's bring it home, literally. Let's look at the 9 East Tennessee markets I track every single month and see how they performed in May. Here's the headline. 7 out of 9 markets saw closings increase year over year. 6 out of 9 saw pending sales increase, and 8 out of 9 posted median price gains. Only 1 market saw prices dip. But beyond those top-line numbers, the individual stories are wildly different. We've got markets that are sitting under 3 months of inventory that are firmly in seller's market territory, and we've got 1 market, Sevier County, sitting at over 9 months of supply, which is a buyer's market by any definition. The regional picture is not monolithic. Your experience depends entirely on where you are. Now, let's go market by market. Starting with Knox County, which remains the anchor for the entire region. The median sales price came in at $400,113, essentially $400,000 flat. That is up just 0.05% year over year, so basically flat. But here's what's interesting. The activity is picking up. Closings hit 780, up 5.8% over last May. Pendings came in at 819, up 13.1%. That's a strong jump. Median days on the market is just 15 days, and the absorption rate is 2.73 months. So the story in Knox County right now is this. Prices have plateaued, but activity is accelerating. Buyers are out there in force. That 13% jump in pendings tells you the pipeline is filling up. The sale to list price ratio hit 99.2%, which means homes are selling essentially at asking price. This is still a seller's market, but it's one where prices are holding steady rather than climbing aggressively. New listings did drop 7.2% year over year, which tells you that the lock-in effect is still real. Sellers are not listing unless they have to. Now let's zoom into Farragut, specifically the 37934 zip code, because this has some eye-catching numbers. The median sale price came in at $794,900 compared to last May's median of $647,500. That's a 22.8% increase. Now, before you get too excited or too alarmed, let me put that in context. Only 53 homes closed in Farragut in May. When your sample size is that small, the median can swing dramatically based on the mix of what sold. And when I look at the breakdown of what sold, we had significantly more closings in the 750 to 800 range and above $1 million, and fewer in the 350 to $550,000 range compared to last year. So the mix shifted towards higher priced homes. The average sale price tells a more moderate story, $819,966, up 4.4%. That's more reflective of the actual underlying appreciation. Here's what really jumped out to me though. Pendings. 64 pending sales in May versus just 34 last May. That's an 88.2% increase. That's remarkable. Buyers are flooding into Farragut. The absorption rate dropped to 2.66 months, and the median days on the market is just 18 days. This market is competitive and getting more so. Closings did dip 8.6%, but with that pending number exploding, you can expect closings to catch up in the coming months. Farragut schools and location continue to drive outsized demand. Blount County, Maryville, Alcoa area, and this one continues to show strong appreciation. The median sales price came in at $435,000. That's up 10.8% year over year. That is one of the strongest appreciation numbers in the region. Closings came in at 193, up just 2.1%, so basically flat on volume. But pendings at 211, that's up 10.5%, so the pipeline is building. Median days on the market is just 16 days, and the absorption rate is at 2.76 months. That is firmly in the seller's market territory. The Maryville-Alcoa corridor continues to benefit from its proximity to Knoxville at a relatively lower price point, though I'll note at a median of $435,000, Blount County is no longer the bargain it was even 2 years ago. It's approaching Knox County pricing, which means that the value gap is narrowing, but demand is clearly still there. And 16 days on the market tells you homes are moving fast when they're priced right. New listings dropped 8.5% year over year, so inventory remains constrained. That supply-demand imbalance is what is pushing prices higher. Anderson County, Oak Ridge, Clinton, and this is one of the most interesting stories in the data this month. Median sales price was $350,000, up 11.1% year over year. That's a very strong appreciation. Now, closings actually dipped at 75 sales, down 6.2% from last May's 80. But look at the pendings, 108, up 35% from 80 last year. That tells me the activity is surging and closings should follow in the coming months. The absorption rate is 2.95 months, approaching seller's market territory. Median days on the market is 32, which is reasonable. So what's driving this? Two things. The ongoing momentum in Oak Ridge with investment and revitalization, and the affordability story. At $350,000 median, Anderson County is still significantly below Knox County's $400,000 median and well below Blount's $435,000. Buyers who are priced out of those markets are looking north to Anderson County and finding real value. That 35% jump in pendings is the proof point. Demand is accelerating here, so watch this market. Loudon County. And the closings number here really stands out. 113 sales, up 28.4% year over year. That is the second strongest closings growth in the region, trailing only Tellico Village, which, of course, is in Loudon County. Median sales price came in at $550,000, up 10.2% from $499,000 last year. That's strong appreciation, and the absorption rate improved to 3.68 months from 4.79, a 23% improvement in market pace. However, pendings dipped to 110, which is down 6%, and new listings also declined over 10%. So while recent closings have been strong, the forward-looking pipeline is a bit softer. Median days on the market is 25, which is actually quite fast for a market at this point. The sale-to-list price ratio hit 98.6%, up from last year, so when homes are priced right, they're selling close to asking price and relatively quickly. Loudoun County remains a balanced to competitive market. The lakefront and premium properties drive the higher median, and at these price points, buyers are selective. But the 28.4% jump in closings tells you there's genuine momentum here. Now let's drill into Lenoir City specifically. The median sales price came in at $509,000. That's up 11.3% from $457,500 last year, and that's strong. Closings came in at 46, which is up 4.5%. Pendings at 47, up 2.2%. These are moderate gains, but positive direction. Median days on the market is just 16 days, matching Blount County for the fastest in the region, and the absorption rate improved to 3.58 from 3.92. Now, I want to be transparent here. With only 46 closings, we're dealing with a smaller sample size, and the median can also be influenced by the mix. The average sale price of $546,365 is up 3.2%, and that tells a different story than the 11% median jump. What I find interesting about Lenoir City is the cumulative days on the market spread. The average is 108 days, but the median is just 16. That tells you when a home is priced right. It sells almost immediately, but overpriced listings sit for a very long time. Pricing strategy matters enormously in this market. If you're listing in Lenoir City, get your pricing right from day one. The data is telling you that correctly priced homes fly off the shelf, but the market will punish you if you overshoot. Tellico Village. And this is the biggest closing growth story in the entire region. 44 sales in May, up 63% from 27 last year. That's a massive jump. The median sales price is $658,500, up 1.3%. So prices are essentially stable, but the volume surge is remarkable. The absorption rate improved dramatically, 3.75 months versus 5.44 last year, a 31% improvement. And that tells you the market is tightening significantly. And here's something else notable. The days on the market actually improved. Average days on the market dropped from 116 to 88. The median dropped from 63 to 47. Homes are selling faster than they were a year ago. Pendings did dip to 37 from 43, down 14%. So the forward pipeline is a bit softer, but with that closing surge, it may just be that pending inventory converted to closed at an accelerated pace. Tellico Village continues to operate as its own ecosystem. A higher percentage of buyers are cash. They're selling in higher cost markets and they're bringing the equity with them. That insulates this market from rate sensitivity. When your buyer doesn't need a mortgage, 6.68% is irrelevant. The lifestyle draw, golf, lake, community continues to pull retirees from out of state at a steady pace, and this month's data suggests it may be accelerating. Roane County, and this is where the data challenges a narrative. Closings came in at 93, up 32.9% year over year. That is outstanding volume growth. Pendings hit 109, up 58%. That is the single largest pending increase across all 9 markets. Activity is surging. But here's the twist. Median sales price came in at $325,000, down 2.8% from $334,250 last year. This is the only market of the 9 that saw a price decline. Now, what do you make of that? I think it's a mixed story more than a value loss story. The average sale price was $415,709, essentially flat with last year's $412,424. And when I look at where the sales are happening, there's been a big jump in the $200 to $350 range. That's where the volume growth is concentrated. So you're getting more entry-level and mid-range buyers coming in, which pulls the median down even as the overall market is heating up. The absorption rate is 3.6 months. Median days on the market is 32. These are healthy numbers. And with pendings up 58%, this market has serious forward momentum. I believe Roane County represents the best value play in the region at just $325,000 median, and clearly buyers are figuring that out based on those activity numbers. And finally, Sevier County. Sevierville, Pigeon Forge, Gatlinburg, and folks, this one is a completely different animal than everything else I've shown you today. Median sale price of $515,000, up essentially zero from $514,500 last year. Flat. Closings came in at 196, which was up 5.4%, so we have a positive volume growth. But here's the number that tells the real story. 9.29 months of supply. Let me say that again, 9.29 months of supply. Anything over 6 months is generally considered a buyer's market. Sevier County is well past that threshold. There are nearly 2,000 active listings, 1960 to be exact. Pendings actually dipped to 297 from 319, down about 7%. Average days on the market is 106 days, median days is 52. The sale to list price ratio is 93.1%, meaning sellers are accepting nearly 7% less than their original asking price on average. This is a buyer's market, full stop. If you've been waiting for negotiating power in East Tennessee, Sevier County is where you have it right now. Sellers, if you're listing in this market, you need to be aggressive on pricing from day one. The data does not support aspirational pricing. You will sit and you will reduce. Now, the underlying dynamic here is the short-term rental investor pullback. A lot of the inventory that is built up came from investors who over-leveraged during the 2021 to 2022 frenzy and are now trying to exit. The primary residence buyer is there. That's what's keeping closings positive, but the supply overhang is real and it's going to take time to absorb. All right, let's bring it all together with your key takeaways for this month. Mortgage rates are at 6.68% and likely staying there, possibly going higher. CPI came in at 4.2%, moving the wrong direction, which means rate cuts are off the table for the foreseeable future. Oil at $94.27 a barrel is keeping cost pressure on everything from construction to commuting. The lock-in effect continues to suppress new listings across most of the region. 7 out of 9 markets saw closings increase. 6 out of 9 saw pendings increase. 8 out of 9 posted median price gains. The overall region is transacting and appreciating, but the story varies enormously by market. On one end, you have Knox, Farragut, and Blount County with absorption rates under 3 months and median days on the market under 20, clear sellers markets. On the other hand, you have Sevier County at 9+ months of supply and over 100 days on the market, a clear buyer's market. So know your market, know your position, and plan accordingly. All right, folks, that's your complete East Tennessee housing market update for June. Macro factors plus all 9 housing markets in our local area broken down for you with real numbers. If you found this helpful, do me a favor and go ahead and subscribe. I put these out every single month, and if you hit the bell, you'll get notified the moment the next one drops. If you have questions about your specific situation, whether you're buying, selling, or just trying to understand what's happening in your neighborhood, drop a comment below or reach out to me directly. I will be happy to help you with anything you have questions on. Thank you for watching, and I will see you next month. This is Troy Stavros with Cornerstone Realty Associates here in Knoxville.